I think the theme today is going to be like the philosophy of charting. Like what's the basis behind it? This is interesting because the spider has broken its breakout. It is a failed bullish breakout. The breakout I'm talking to is this horizontal line right here. When we leaped above it like so to a new lifetime high and created a gap. As of yesterday, the gap was closed. That breakout is moot at this point. Doesn't mean it's plunge-a-rooney time, but it definitely completely sours the bullish nature of that breakout. Likewise, the OEF, which is the S&P 100 ETF, as opposed to the much more heavily traded spider, that has also breached its breakout. I'm using more cautious language here because we're currently trading right at the breakout, but we definitely, as you can see, have traded below it. Obviously, today has been a really dynamic day because what had happened was the market was down just a little bit, waiting for the PCE, and the PCE came out ice cold. We're supposed to believe that inflation's 2.4%. I buy six figures of stuff every year, and I am greatly attuned to what things cost. We ain't at no 2.4% inflation. It's way in the double digits, but we're supposed to believe it's 2.4%. Based upon that, the market went berserk and just rallied like crazy. That stopped. About 15 minutes before the opening bell, the futures peaked and sold off hard. And about 3 hours into the trading day, it bottomed. And it's been fighting back ever since because, that's what you do at the end of the day. But it's really interesting that even with a really bullish friendly PCE, at this moment, the ES is down, the NQ is really down. The RTY is actually up just a few hundredths of a percent. So it's been a very interesting day with some pain I'm going to tell you about a little bit later. Here's the XLI, which is a different industrial ETF. Very interesting here because we've got a new price gap on our hands, this red line right here. The gap existed already, it was created here. We have sealed up that gap nicely, but we seem to be respecting resistance right now. What I'm saying is we could find on Monday, start to sink immediately below that gap. And then IYT, which of course is the transports, very interesting stuff going on here. We've got a head and shoulders, it's pretty good. I'll give it a B, B+. And we've got, I think, fairly clean resistance there at 63.91. Even though we were at lifetime highs just in March, which is kind of the peak of the Q1 frenzy, over the course of many months, it's formed this very cool topping pattern. What I'm saying is next week could be a nice, good down week based on this because the PC was the last big news. The next one will be a full week from today, Friday morning, the unemployment report. Optimistic about being pessimistic that we could see some sinkage next week. EEM. This is down nice and hard, about 1 1/3%. Again, wallowing around in the excess of time I've got. I want to say something in general. I'm starting to warm up to some more aggressive trading because those of you who watch me for a while know that I tend to buy puts that are like way out in the future, months and months out, just to ameliorate any anxiety on my part, probably. And I've got to say, in recent weeks, make it like a tiny position, and they seem to be working every time. EEM reminded me of that because I think it was on Tuesday, I bought puts on EEM. I bought puts here, and it fell hard the next day, and I sold at a nice profit, patted myself vigorously on the back. It kept going down. So again, it doubled from where I sold the puts, but still it was a nice fat gain. It was like tripled the next day. As usual, I got out too soon, but that was interesting. These short-term things are throwing off really big gains. I don't necessarily take them, but I'm really starting to warm with this idea of maybe I don't have to buy puts that are 18 years in the future. Maybe I get something more aggressive, like 2-3 days out. Obviously, there was big legal/political news last night. That makes following DGT kind of more interesting today than normal. This doesn't really illustrate what went on after hours because it was very dynamic. I think it got down to 44 and up to 54, bouncing all over. At the moment, it's red, down about 6%. Now, semiconductors have been big news today. AMD is starting to weaken. It peaked way back on the 8th of March, which was NVIDIA's peak at the time. And it's holding its own pretty well, but I went ahead early today and got some September puts on AMD. It's got a fantastically high PE ratio. I've got to say it's like in the hundreds. It's like 250. That's not the basis for it. It's just kind of makes it a little more obvious for me. Was down real hard earlier. Now, okay, this is interesting. This is something I've just noticed. Look at the gap. Isn't this cool? Check this out. All right, so the price gap is between here and here. So it was established, the high on the 24th is the anchor for the price gap. And so what's the figure? 1064.75. And what's today's low? 1069.90. So like some very, very, very tiny percentage. Just about a perfect seal. If you own the stock already and have been sort of clenching your teeth, maybe that's good. You know, if that gap isn't violated, maybe we're done. Yesterday's weakness, today's weakness, maybe that's all. And we'll go on to 1200, 1300, 1400. If we break that gap, I think it's a pretty big deal, and it opens up the prospect of a fall down to here, this next gap down, which is sub 1000. Kind of a big deal. Now we move on to my blunder of the year, which is SMH. Really just an hour or two before the close, I got it in my head that wouldn't it be a nice thing to own some SMH puts that expire Friday, the 31st, today. It wasn't a big position. I just felt that it was worth a shot. And it wasn't because there was any big semiconductor news coming or anything like that. It was just seemed like the right thing to do. Now I realized, let me preface this by saying that I realized that war stories about trades that didn't go well are so dull. I don't mean to bore you, but there is a point to this, I think. Yesterday I acquired those. As you know, the PCE was very bullish this morning, and the market and Nvidia and SMH all went whoosh. I was thinking, and added to which, when the market closed yesterday, those puts I bought already had like 70% profit or so, just like in an hour. So that felt good. So this morning it's like, well, that profit's gone now, and it's probably going to move into a loss, and this could be a complete wipeout. And so I get all that good trader talk about freaking myself out. 11 minutes into the trading day, I got out and literally, not making this up, sold them for a penny more than I bought them for. So basically a wash. SMH did this. I would also add to this that the line I was watching is this green line right here. Another price gap, see, between these two. Nice price gap there. And in my head yesterday, it's like, maybe it'll fall down to there. It actually did, and then some. Suffice it to say that my wash trade went up about 360% after I dumped it. Not a good feeling. Good illustration as to how the psychology of a trader can really muck up the rational mind. Because I had said to myself even yesterday that, my target price, as ambitious as it sounds, is that gap. It did that and then some. A, I suck, but B, it also makes me think maybe I should, do this more often and like with a bit more of a backbone. That was kind of my pain of the day, because just watching it soar in value, not good. All this, of course, is flowing into the cubes to some degree, which, not surprisingly, have the same gap, date-wise, of course, not price-wise. You might as well be NVIDIA or SMH looking at this, because it's the exact same setup. We're trading at the gap right now. The low for the day is well below the gap. The gap's already been sealed up. All very interesting stuff. And the NQ has been particularly weak today. Even now, with this end-of-day rally we've got going, the NQ is still down, 218 points. So it's been a very interesting day because it was quite green earlier, post-PCE. It's not just PCE or anything like that. There are some specific stocks that are moving big. One of them is Dell, down about $30, about 18%. It's not catastrophic. All it's done is like delete the past, week and a half of gains. The vast majority of all these gains are completely intact. I saw articles written just yesterday about this Dell rally is not over and I'm going all in, etc. Even though it's rather pricey, it definitely, the froth got blown off that beer in a hurry. Another one which is interesting to me is MongoDB. Now, longtime viewers may remember Mongo used to be a real favorite of mine. I read a whole post about this yesterday on Slope. It was sporting a fantastic head and shoulders, like the cleanest I'd ever seen in my life. And true to form, it fell hard below that. After it retraced, what it's supposed to do is retrace to the neckline and then fall. It didn't do that. It retraced the neckline and said, you know what, I think I'm just gonna go up and up and up and up, and it almost got to lifetime highs. So that was a disaster. Reality came back and finally caught up with it, and there we have it. And actually, we've got kind of a fractal going on right here between these two, because this is head and shoulders, albeit a much smaller one, just like this one was. This is snowflake, symbol snow, and if you look at this bullish setup, the rally that followed, and then the droop that happened afterwards, we're getting the exact same thing going on. This portion here being analogous to this portion here in terms of the price peak preceding the plunge. So it's an unintentional alliteration, but I'm a writer at heart, so there you go. Path, we had talked about this prospectively as a bullish setup, which it was, like so. We had a triangle, burst higher, retraced. Things went sour though once it started violating these lines here. And to be perfectly clear, even yesterday, actually 2 days ago, when it started pushing below those trend lines, it's like, okay, forget it. This pattern's been violated. So there was actually kind of a couple of day warning before disaster struck. Path got hit really hard yesterday. Excuse me, 1 day warning. Once those trend lines get violated, the basis of the trade is moot, which is what happened in that case. And the same's happening with Couchbase as well, because this is a nice bullish base. We had a good rally here. It retraced, began to strength again, didn't even match the former high, and it's just kind of spoiling and souring away like so. So that's kaput as well. Since I wasn't doing the program yesterday, we missed some big moves, but just to recap those, CRM, Salesforce, took a big dive yesterday. It's recovering some of that. And this one we talked about last week as far as a long prospect, or maybe this was just a few days ago. This had a huge rally yesterday. It's starting to unwind some of that right now, but this is LPA. Another anecdote for you, another trading anecdote. And this is not a tale of woe. This is unlike the SMH tale. This is a tale of some small amount of courage is too strong, but resolve, let's say. And this is seizures. Now I've got 8 bearish positions. One of them is Caesars. Caesars was one of my most profitable positions until this morning. And this is unusual. A couple of hours into the trading day, this thing went vertical. When the market opened today, it was still a nice fat profit. Again, these are September puts at least, if not later. And those profits got zeroed out. And this thing went crazy. Why? Because Carl Icahn made it known that he's acquired a whole bunch of CZR. And the market just gobbled that up. At the time, my initial inclination was to get rid of it because, this looks bad. I didn't do anything though, because I was away from my desk and I wanted to look at the daily chart instead of this scary looking minute bar chart. And when I did, not only did I not get out of the position at all, I added more. And typically like averaging down or adding to losers, that's a beginner's mistake. In this instance, I felt so strongly about the nature of the pattern that I bumped up the position by about 33%. And, so far so good. It has moved away from those loftiest highs, but my view is that this is a powerful pattern with a Himalayan landscape overhead supply as my ally. Ain't getting out of that. Ain't getting out. Got in more. I would also say, since my enemy in this is no less a man than Carl Icahn, I decided to check out Icahn Enterprises because that's not a chart I look at very much. I believe that's kind of his holding company, representative of his investments and so forth. There it is. As you can see, it's, there was a time it was fantastic. Back in 2003, 4, 5, 6, this is amazing. Just did amazing stuff. However, since then, it's been kind of a big fat mess, particularly recently because he had another good run right here. My point is, I ain't scared of Carl Icahn. And I look at this stinks. And so, great, you've bought a bunch of stock. Judging from this chart, it doesn't look like you're betting 1,000. So in any case, I'm still in Caesars even more than before. So yay. I would, offer as an illustration also of like, so what? Like Kathy, because I said earlier, the political figure normally doesn't have a ticker symbol. Now we've got DJT. Well, investors have sometimes ticker symbols too. Like with Icahn, we've got IEP, and with Kathy D. Wood, we've got ARKK. This is her main fund. And there was a time when she was a sensation, and rightly so. She benefited tremendously from the trillions of dollars of COVID aid because it helped the kinds of stocks she was invested in, like Tesla. They did fantastic. And it makes all the sense in the world that anybody would look at a chart like this and say, give me this woman. Let's get interviews, let's see what she's investing in, let's see what her thoughts are, let's read her white papers, yay, yay, yay. But since then, this has been a train wreck because she has crazily underperformed the cubes. Net, the price right now of ARK is no different than it was 6 years ago. which is not impressive. So I'm not doing this to pick on Kathy again, just to simply say, this is why I decided, let's look at Carl. Let's see how he's doing. Just kind of get the fear factor going on. Of the 8 positions, I've mentioned a few so far. I bought, for the first time ever, I got NVIDIA puts early today. So that ameliorated my heartache from SMH to some degree. And also Caesar. So that's 3. What are the other 5? I'm glad you asked. I have those ready. The other 5 are Comerica, CMA, which is up at the moment, but that's not too big a deal. I've got a stop loss right there. We've got IBM, International Business Machines, which is actually my best winner. This one is down a little bit right now, but this, in terms of the portfolio, this is the best percentage gainer. Keycore, which is up kind of strong today. That's okay. These are November puts, and it's a long-term, slow-moving position. And if we zoom in like so, I've adjusted the stop loss like that, and so that should be cool too. A couple more. Meta, this is down about a little over $5, and hard stop loss on this one right up there at that dashed line where that gap is. So that's Meta, like so. And the final position, which is finally moving the right way for the moment, is Royal Caribbean, RCL. And my hope for this one, of course, is to ultimately re-break that channel. When I say re-break, I'm talking about this failure right here. And my target, crazy as it sounds, is way down at like 115. Those are the 8 all puts, all expiring no sooner than September 20. And so the last thing I want to say is about TLT, which is up today thanks to the PCE. And I just say again, I know this is a bit repetitious, but I just got to drive this point home. Diminishment of the bond market is something that I anticipate, I think will be absolutely imperative to weakness in equities. This looks bearish to me. I'm actually delighted this thing is strong today because I think this is set up for a fall early next week.